Welcome to this month's Market Update. I'm here today with KC Lowe, Principal Consultant with Frontier Advisors. Hi there, KC.
Wayne?
Let's start today in Japan, and in particular around interest rates. What are the latest developments there?
Yes, it's the end of the era in Japan. The Bank of Japan, at the most recent meeting in March, have finally decided to raise interest rates. They've had negative interest rates since about 2016. And the last time they've hiked interest rates was in 2007. So it's been a very long time since interest rates have gone up in Japan. What's given the Bank of Japan confidence to hike interest rates finally is on inflation. So that's the key focus there. There's been a few data points that's given them confidence. The first one is inflation in Japan is at 2.8%, which by developed market standard is quite low. But in terms of Japan, where they've been combating deflations of falling prices over pretty much the last 3 decades, 2.8% is actually quite significant.
Yes.
The other piece of data that's given them more confidence to hike rates is the latest round of wage negotiations with large businesses. So this year, the negotiations came out at 5% wage growth, which is the highest level since, I think, 1991. So a big shift there. So all that has given them confidence to hike interest rates. As part of an announcement, they've also stopped their yield curve control program, which essentially is managing longer-term interest rates. They've also canceled their exchange-traded funds, ETFs, and also real estate investment trust, REITs buying program. So they feel like financial markets no longer need that much support from them anymore. But having said that, it's only a small increase in interest rates. They've only gone from negative 0.1% to 0% now.
Yeah.
And as part of the announcement, the Bank of Japan also said that they think that policy will have to stay accommodated for some time yet due to economic uncertainties, both domestic and also global. So market expectation was actually for a bigger move. As a result of that, the Japanese yen actually fell because it wasn't as big as move as they were expecting.
Yes. So keeping with the interest rate theme, but coming back to our shores, what are the latest signals from the RBA?
So the Reserve Bank of Australia kept interest rates unchanged in late March, so 4.35%. But the key takeaway from this announcement is that it does seem like they've moved from interest rate hiking bias to more of a neutral bias now. And so rates could potentially go up or go down now. And the reason for that shift in view is that the economy is loosening up. We're seeing unemployment rate continue to tick up a bit. And inflation continues to moderate, although it's still above the central bank target. But they gain comfort that it is continuing to trend down. So interest rates haven't really moved in the last couple of months. And what the announcement revealed wasn't too much, although it's a neutral bias now. But in terms of market expectations, it hasn't moved too much over the last few months either. But it is expecting at least one rate cut in the second half of the year sometime.
Okay, now let's just finish the discussion today with a quick view of the US and I guess the global economy more broadly.
So when we look at the US Federal Reserve, it's a similar case there. They left their interest rates unchanged, 5.25%, 5%. So, very high levels, again, comparing that to Japan, which is still at 0%. The key focus for them is also inflation, where, it's still about 3% above what they're targeting. So they still want to watch that quite closely. But in terms of the economic growth in the US, surprisingly, it's been very resilient, especially, if you think about interest rates having increased more than 5% there in the last 2 years. Growth is still going quite strongly there. But when we look more broadly, the UK, Europe, Japan, they're pretty much all in recessions now. So the US continues to be a bit of a standout there. And when we look at Australia, yes, we still have positive economic growth, but a lot of that has been driven by our population growth, not underlying fundamental growth there. So it does seem like the US is a standout in terms of the resilience of the economic growth. And I guess putting it all together, the US economy is probably the most important one, just given how much it contributes to the global economy, but also given the size of its financial market. So I think that's the one to watch closely.
Great. Now, you began the discussion today talking about the end of an era with the interest rates in Japan, also the end of an era for the market update videos, KC. After 8 years of us recording these discussions together for our viewers, You'll be moving on from Frontier soon to take up another career opportunity. Congratulations on that. But thank you for your time, your advice and your insights for our viewers over the last 8 years. It's been a pleasure and a privilege to work with you, KC.
It's been a pleasure, Wayne. Thank you.
And thanks to you for watching this month's Market Update.